What's going on, everyone? This is Stephen Place with Precision Volume Alerts, and welcome to the Watchlist Wednesday for Wednesday, November 17th, 2021. We're talking about the semiconductor sector. It is the hottest sector in the market right now. We've got two narratives that they may not necessarily be driving price, but it brings enough attention to the sector that leads to significant price appreciation. So first, you've got the chip shortage, which everyone's talking about, where foundries cannot manufacture enough chips due to hangovers from the Rona, effectively, where the price of these chips will go up due to a lack of supply. Now, that could potentially be transitory, all right? And transitory is such a nasty, politically charged word right now. We'll look at, if I can remember to do this, we'll look at lumber futures as an example of how that can be transitory, all right? So we'll add that in there as well. So that's the first one. The second one is the continued emergence, and that's not even the right word. Emergence isn't the right word because we are starting to see more saturation, but in cryptocurrencies, to mine Bitcoin, to do other things outside of Bitcoin. And I'm still fairly new to the space, so I'm struggling to really explain how all of that works. It basically takes GPUs, graphic processing units, okay, instead of CPUs like what you see on Intel. All right, so those are the two kinds of ideas that are driving the, not necessarily the price, but the attention to these stocks, which helps to get the price higher. Okay. So margins are expanding for these companies. Revs are expanding for these companies. Continued growth in these names. So it's the hottest sector on the market right now. Okay. Some of these can be worth a look to fade if you are looking from a short biased standpoint, but that's more of a trade. And we've done those before inside of PVA and they work out pretty well. But what you should be doing right now, if you did not catch the ride on this move, start looking for consolidative patterns, start looking for flags, start looking for pullbacks to levels in which you would reasonably expect buyers to step up again. Because I feel that there are still, on the institutional side, a lot of funds who are still underinvested in this sector, and dips, because we haven't had a dip yet, these dips, odds are they will be bought. Okay, so first up, let's take a look at lumber futures, just really quick as a transitory kind of idea. All right, so this is what lumber did over the course of about a year. It went from, this is random length lumber futures, and it went from about $400 to $1,700, and then it completely cratered because we didn't run out of wood, right? We ran out of lumber processing capabilities, and that supply chain bottleneck, it's not completely resolved, but it got resolved through price. All right. So one question that is a reasonable question to have when we talk about these chip shortages: at what point will the supply come back online where you no longer have the capabilities to have margins expand in these companies or continued growth in these companies? So that's sort of the slight bearish thesis to consider right now. The other thing to remember that this rally is not evenly distributed. All right, so take an example in Intel. Old man Intel, right? Hasn't gone anywhere for years, right? It's been stuck in a range between about 44 and about $60. It's seen some potential movement to the upside, but it's just not there. Okay, now you can assign all sorts of reasons to this, but within the context of what we want to do as financial speculators, just put your blinders on and say, okay, odds are this is not going to be an easy trade. You know, maybe if it pulls back into 44, you can get an idea for some long calls or things like that. But right now, it's not much of a trade. Okay. The sector indices you should watch, first up is SMH. And if we zoom in a little bit, you can see how well that this is done. From the most recent pivot lows at the beginning of October to now, we're up 22%. That's really good for an ETF. You can also look at the Philly Semiconductor Index SOX, and it's going to have a very similar kind of look. So what are some of the names that have been working well? First off, to toot our horn at PVA, we've been long on semiconductors since about $34. It's trading at 62. So this one still looks good. It had a nice gap up on earnings last quarter. went sideways for a bit. Then it saw a second gap up this quarter on earnings, and we're just riding this and holding on for dear life. And until we see evidence of a trend reversal, we want to stick around in it as long as possible. The next one that we have is Applied Materials, and this one, it's not directly related to things like NVIDIA and AMD, but it was a pattern that we've been watching and been involved in for a while. We finally saw a break at above 142.5. We saw a push to 155. It's currently trading 156.5. I wouldn't be surprised if we did see some kind of a bull flag and some sideways action, but overall, this is, if you look at this on a weekly chart, that's about as good of a continuation pattern as you can get, okay? So some other names that you absolutely have to have on your watch list. The main one is in NVIDIA, and I've traded this a handful of times, primarily to the short side. I've missed out on a lot of the long movement. I've just been fading it here and there. I've traded puts on this before, but I did not trade that breakout, which I should have. Still kicking myself over it. But they just reported earnings. They're currently trading 308.50. I think we can actually look at this on a 5-day, and we can look at extended, so you can see how it's trading in the aftermarket session. So it was a little bit heavy, and it sold off all day. Go to 30-minute chart. Oh, that is ugly. Those yellow lines hurt my eyes. It traded soft all day, and it had some really nice numbers. It's trading back up into around 311, 312, so we'll see if sellers show up there. If they don't, there's still a lot of momentum right here, okay? If NVIDIA rallies but fails to see follow through to the upside, then you can probably take a shot to the short side with puts, okay? That's very aggressive, very speculative. Overall trend is still up, so you just have to keep that in mind. Another one to watch is AMD. This is another one kicking myself because I had watched it from about $100, and then I watched it go to 105, and then I watched it go to 110, and I just watched it the entire time. So still kicking myself that I missed that. One thing that you can do is look at the anchored VWAP from the start of the rally, and that should be a pretty good place to trade the stock as it catches up to it. Another thing you can do is just keep an eye on the overall volume that's traded from the start of the rally. Okay, and you can see we're starting to see a little bit of a double distribution at the top, and not a whole lot until we go all the way back down to 123. But odds are what's going to happen here is that worst case scenario is a crash, obviously, but the highest odds, bad case, is more sideways price action, very similar to what we saw for the parabolic spike in August. Xilinx is another one. This also is it's a monster, right? And this one, I am starting to look for a fade. I'm not there just yet. I'd like to see a little bit more upside, and then I will start taking a look at some bearish ideas. I'm not looking for the collapse of Western civilization, right? That's just a normal fade trade that I like to take. And if the options are cheap enough, I'm going to play it. Same kind of thing with NVIDIA, same thing with AMD, especially with NVIDIA. Now that earnings are out of the way, if options get cheap enough into a little bit more of a rise higher, you can consider that, again, very aggressive. Next up, KLAC. All right, a lot of these are just following the same pattern. And this is why I'm talking about this so much, because when you have so many stocks in the same sector going on these monster runs, there is a tendency for these kinds of trends to continue. So, right now, do I say go buy KLAC at 419? No. If it goes sideways for a week or two and it's still at 419, yeah, right? You just need to see a little bit more information, need to see a bit more of a reset or a pullback or some kind of a flag pattern to play it for continuation to the upside. Next up, Marvell. Again, extended to the upside. It's not actionable right here, but it could be in a week or two. Another one, AVGO, Broadcom. That's Broadcom, right? It saw a really nice lift from 510, ran all the way to 570. It's a touch extended right here. Again, you may be able to consider a fade. It's a $500 stock, so those puts are going to be expensive as all get out. But overall, this still looks fine. And on the same kind of idea on these weekly charts, this is not something you short. A stock breaking out at all-time highs, you can't consider a structural short. You have to consider tactical shorts if you do want to trade it like that. One interesting one right here is Taiwan Semiconductors. And this, very similar to Intel, just kind of been range bound, but the price action we have seen over the past year is much more constructive relative to what Intel has been doing. Okay, so this, if you're looking for a pile-on effect, okay, where you could potentially see a push to new all-time highs at 140. You know, you can take a shot with something like the Jan or Feb 140 calls. Ideally, you'd wait for a confirmation of the breakout, but I wouldn't, you know, it wouldn't hurt to be a little anticipatory right here, saying, okay, I will get a better price entry. It may lower my odds a little bit, but it's just the kind of market we're in right now where you kind of have to anticipate those kinds of breakouts to profit from them, okay? So right now, I've got some other advanced trades on with SMH, with some put calendars, some other things where I'm just expecting sideways action. I think you can start looking at fades in some of these very extended to the upside names, but you have to just be very graceful about your entries and exits to make sure you don't get absolutely run over. And then finally, if they start to see consolidation, and if they don't get absolutely truck stick to the downside and they just go sideways for a little bit, those will offer amazing risk reward opportunities for another continuation there. If you want to see our setups, including any long or short trades in this sector, and we will be putting some on very soon, become a member of Precision Volume Alerts. To do that, you have to get onboarded with our training first. So below this video is going to be a training webinar that you can go watch to show you exactly what we look for, how we trade, how we find these very profit-rich ideas. Once you get onboarded with that, you'll have the opportunity to become a member of Precision Volume Alerts at the end of that training. I highly encourage you to do it so you can get access to our portfolio and all of our live trade alerts. That's all I got for this week. Thanks for watching. Have a great day.